What's up, guys? It's B from Silent Pips FX Academy, and today let's have a look at this chart. Now, if you're trading the foreign exchange market and you have charts that looks like this, there is a problem. Most of the times, you see experts trading the market and they're trading naked charts, no indicators, nothing to obscure them from seeing what exactly is happening within the market. At the end of the day, are able to predict the market movement very well and very accurately, and this is the basics of candlesticks. Now in this video we're going to be looking at candlesticks. We'll see the structure, how they are formed, and when you know all of this, it gives you an upper hand. Take a look at this candlestick here. If you understand how it's been formed, you know what to expect when you see this type of candlesticks within the chart. Now the structure of a candlestick, if you look, we have two candlesticks here. We have a bearish candlestick, we have a bullish candlestick. The bearish candlestick most of the time is indicated with a red color or a black color, whereas a bullish candlestick is indicated with green, blue, or in some cases white. Now, whatever the case, you should know that the bear indicates a candlestick that shows a decrease in price. The market is falling. The bull shows the market is rising. Now, how are candlesticks formed? When you look at the diagram here, we have lows, we have highs, both on the bullish and the bearish candlestick. In the case of a bearish candlestick, we know that the market needs to fall, so it starts at a high. So the market opens above. That is the open of this bearish candlestick. As the market open, it moves down. It could go up to this top extremity. This top extremity is called the high. After it has gotten to this top extremity, it later on falls down to the lowest extremities, and it is called the low, the lowest point where the market went to. Now the market can move up again to this point, and it finally close. It's called the close. This is the structure of how a bearish is formed. Now it is the same thing for a bullish candlestick, except for a bullish candlestick, the market opens at the bottom rather than a bearish candlestick where the market instead opens at a top or at the upper level. Now for a bullish, the market opens, it moves up, it could come down to from the lower extremity to form the low. The market moves up again to the higher extremity to form the high, and later on come down and closes at the close. The distance now between the close and the high, the open and the low, is called the shadow or the wick. Now we have the lower leg or the lower wick, and we have the upper wick too. The distance between the open and the high, or at the high and the close. Knowing how candlestick forms is absolutely important, because this is where the various type of candlestick originates. You'll see the differences based on the length of the body or of the wick. Let's look at some basic candlesticks. Overall, a long candlestick and short candlestick, the difference comes between the body being relatively longer, 3 to 4 times longer than the wick or the shadow. This is a body. So we have a long white candlestick, we have a long black candlestick, we have a short white candlestick. Where you see here the shadow, which is almost compared to the length of the body. You can see the difference between the long and the short candle. Now looking at the structure, long candlestick indicates momentum in the market, when the bears, in the case for a long white candlesticks, or when the bulls rather, the bulls are having momentum in the market. So for a long black candlestick, the bears have momentum in driving the market. You see this type of candlestick, there is high potential for the market to move to this particular direction. Let's look at the Marabozo. The Marabozo. Now these are long candlesticks, but the difference in the Marabozo is that they have little or no shadow. If you look at the white Marabozo as such, it has little or no shadows, and it tells us that there is momentum. There's a lot of momentum in the market. Most of the times, Breakouts are always accompanied by marabozos. There are a lot of momentum to break a particular support or resistance level within the chart. Now, the other candlestick that we'll look at is the pin bar. The pin bar shows suppression in strength. In the case of a bearish pin bar, this is how it's formed. The market opens. The market opens at the top here, and the market opens at the top and then move right up to this level. Then what happens? Take a look. The bulls take control of the market. They pull the price up to this point here, the high of which is 4 or 5 times greater than the length of the body. When the bulls take control up to this point, the market is not closed yet at this point. Then this is where the pin bar is formed. When the bears suppresses the momentum of the bulls, pull the price right down to this point, forming a very tiny body compared to the length of the upper shadow. So for pin bars, they have shadows that are very, very long than the body. 3 to 4 times longer than the body of the candlestick, and the shadows or pin bars are pointed only at one direction. For bearish pin bar, you see the shadow at the top. For bullish pin bars, you see the shadow at the bottom. Here it is bullish because the shadow was at the bottom and the bulls pull back the market up till the market close. Now, okay, bullish pin bars, depending on their location, we can have shooting stars or inverted hammers. Now, shooting case is at the top of a trend. You will see shooting stars. This is how they are like. Now, for this case, the market open at the bottom here, went right up, and then the bears took control and pull them back towards the downward direction. And in the case of an inverted hammer, now this pin bar is rather at the bottom of the trend. So this bearish pin bar, the market started moving from the market opened from this point at the low here, went right up to this point, and what happened? The bears took control of the market and pulled it back down to this point here. Now, just with this notion, when you look at this, you know that who is in control of the market in this case definitely is the bears, right? And the next candlestick that we're expecting to form, we expect that because of the strength that the bears had to pull the price from this point, bring it right down to this other point here, then they have more power. So we are going to see the next candlestick form to be a bear candlestick. Now, what's our spinning tops? Now we have the bullish spinning top and we have the bearish spinning top. Based on their colors, we can classify them as such. This tells you that there's an average or there is an equal distribution of momentum. The bulls pull the price up to this point, the bears brought it back, forming a body or producing shadows that are equal to the lower shadow. These spinning tops, you can find them at the top of a trend or you can find them at the bottom of the trend, but it tells you that there's a balance in the momentum. Should in case you find it at the top of a trend, it tells you that the bulls were pulling the market. They had power to take the price up to the top extremities, but at the end of the day, the bears pull it back down. It tells you that there's equality in momentum, that there is a tendency in this case that the price might reverse towards the downward direction. When you see this, we need further confirmation. We'll see that in subsequent videos. Now let's look at the most very important candlestick you'll find. This candlestick is called the Doji. Dojis have little or no bodies, and so we have the neutral doji, of which the upper shadow and the lower shadow are comparatively the same, and the body is almost negligible. These dojis have very tiny or small bodies. Now we have the long-legged Doji. It is similar to a neutral doji except that the shadow are comparatively longer. Now dojis in general, or a neutral doji or a long-legged doji, shows neutrality in the market, indicates a possibility of reversal. We have candlesticks and we have candlestick patterns. And candlestick patterns are when you see a combination of two or more candlesticks. But most of the times when you see dojis, we're expecting yet another candlestick that will form with, and will give you further confirmation on what to do in the market. We're going to look at candlestick patterns in yet another video. We have a gravestone doji. Gravestone doji is one in which the body or the upper shadow is 3 or 4 times greater than the body. Now most gravestone dojis, they don't have a lower shadow, they don't have a lower weight. This indicates that the bears have absolute control of the market. If you see a gravestone doji as such at the top of a trend, then you are certain that there is a reversal towards the downward direction. Now, as opposed to a gravestone doji, we have the dragonfly doji. It's actually the reverse. The lower wick is 3 or 4 times greater than the body, and most of the times you see dragonfly dojis with no upper wick. This tells you that the bulls are in absolute control of the market. If you find such a candlestick at the bottom of a trend, then the bulls have the tendency to pull up the price back towards the upward direction. Now that we've had an overview of the basics of candlesticks, let's take a look at the chart and see how this can help us analyze the market just by looking at the price and the structure of the market. Coming back into our chart, we can try to spot a particular candlesticks and see. So just by looking at this, let me zoom in so you can see very well. Now, which candlestick is this? This is a gravestone doji. A gravestone doji tells you that the bears are in control of the market. Notice what happened. The next candlestick that was formed, you see that the price actually went towards the downward side. That was the function of the gravestone. We have another gravestone doji here. You notice what happened after the gravestone doji was formed. Now, even though this looks green in color, it does not disqualify that it's not a gravestone doji. For a candle to be a gravestone doji, the upper wick of the candle must be at least 3 times, or 3 or 4 times, or greater than 3 times than the body of the gravestone or of the candle. Now, notice what happened after that. You see that the price actually moved towards the downside. Let's take a look at and see for the candlesticks. Now, this is a case. This is a case here where you see a gravestone, a very good gravestone doji with a very long upper wick. But notice what happened afterwards. We instead had an increase in price. At least temporarily, the price increased from here up to this point. Now you have cases like this. That is why you need not only trading candlestick types, but as well trading candlestick patterns, where you have a combination of two or more candlesticks to influence the direction of the market. But overall, the price moved right down to this point here after the doji. Now we're going to have other videos where we'll see chart patterns, candlestick patterns, and so on, how we use a combination of two different candles to be able to predict what will happen next. Looking at the chart, it's very important to understand the structure. Just looking at it, we have a gravestone. Here we have a doji. Here we have a marabuzu, a bullish marabuzu candlestick, and we have a couple of them. Looking at this chart, it is very important. Now you see that because the price was pulled from this point right down here, you already know what you are supposed to expect. Because the price was pulled from here, right towards the top by the bulls, you already know what to expect in the market. Right now, the bulls are taking control of the market. Now, what do you expect next? In subsequent videos, we're going to see how to bring all of this together: candlestick, chart patterns, candlestick patterns, and so on and so forth. All of this is going to give you an upper hand while trading the foreign exchange market, and it you to be easy or to easily predict the direction or the movement of the market. So make sure you like this video and do well to subscribe, so you're going to be notified the next time I upload videos like this. Thank you for listening to the end. Ciao guys.